In today's video, I'm going to give you my best 5 dividend growth stocks that right now are amazing. Let's go check them out. I can't believe this. So over the past year, Home Depot has been making an absolute killing. They pay a dividend of 2.12%. And their volume right now is not too bad at 4.1 million shares traded every single day. Their PE ratio for their sector is actually quite low, in my opinion, at 22, and they are well off of their 52-week high. So this company could have some nice growth to it, pays a nice dividend, and because of all of the money that they have been making through the coronavirus pandemic, everyone working from home, seeing their home and saying, I need to improve it, I'm going to assume that they will also be raising dividends quite heavily because of the money they have made over the past year. They have also had a fantastic growth story for the past 5 years as well. Of course, there was that dip, but now what we're seeing is a stabilization, good growth on very good volume, and now it's starting to dip back down. I think that it could reach this range that it met right here, and it could potentially bounce off that. Always do your own research, but this could have some great stock performance in the future. I think it's going to be great. We can also see that they have been raising their dividends throughout this time. Since 2019, they have raised their dividend from $1.36 to $1.65 per share, and they've been basically doing this about once per year, and it seems to be working out pretty good. They raised it 10% right there. Absolutely fantastic. JP Morgan is another one. They're going to be able, so far from what I've been reading, able to raise dividends as of June 30th, which is fantastic. They're currently at 2.3%. Ridiculous volume as well. And for a bank at 12, for their PE ratio is actually very good right now. They have had some growth. They're starting to stabilize. It's going to be very interesting if this forms a potential head and shoulders, but as of right now, we're not there, and it looks like it's dipped below that limit, so there could be some upwards growth or there could be some stabilization right now. Remember that, of course, the Fed has now allowed the banks to raise their dividends as of June 30th, which will now, if they do raise their dividends from that point, now that should show to the investors that this is a strong company and there could be some upside to that. As we can see, they haven't raised their dividend for a while because of COVID. They've been frozen. They cannot up it. However, they recently, before COVID, went from 80 cents a share to 90, and now before that they went from 56 to 80. So there could be some massive potential dividend growth coming in the future. Financially, they're all stable as well. Of course, their 2020 wasn't anywhere close to what TD's 2020 was like, but still a very solid last 4 quarters and still a very solid year considering how bad it really was. Now, TD, a cheaper PE ratio of 11, and from there, very good volume at 3.6% dividend. Now, this is a Canadian bank, which means that they are still not allowed to raise their dividends because of the Canadian bank watchdog is now not allowing them to raise their dividends, probably not until next year, I would assume. And because of that, they're going to be staying at a fairly low dividend if this price continues to up itself. But once they are allowed to raise their dividend, basically it's going to show to the investors that it's a solid company. There's also been a story on BNN a while ago about how there's record number of cash in all of the Canadian banks right now waiting to pay a dividend. So I'm going to say that that is pretty well going to have a massive growth story considering how cheap the PE ratio is. That's also telling me that the stock price may increase very soon as well, especially if they start and continue to have good quarters. They were trading within a range for a while, COVID hit, and now they are, of course, at all-time highs, or at least very close to it. And their dividends have been raised recently, but of course, they can't from 2020 on because of COVID, so that is kind of the downfall to that. They're going to be frozen at 79 cents for probably a couple of more quarters. They have obviously had a very, very good last 4 quarters. However, this is something I really want to point out is they were able to make more money than they ever did before, however, with less revenue. So they earned more money with less revenue, which means that when they go back to this kind of revenue, that should entail a lot higher earnings, which to me will mean that the banks are going to be doing extremely well over the next couple of years. Anytime a company is able to make more money with less revenue, you now can see that in the future they're going to be set up very, very, very good, because now they have basically learned how to conserve cash, which now is a double-edged sword for us investors, because of course the stock price will rise because the company's making more money in terms of earnings, but at the same time that also means that they could raise their dividends even bigger in the future, and that's what us investors really, really want. Now, if you're on the tech train, Texas Instruments makes a lot of processors. There's a processor shortage right now. They pay a dividend of 2.1%. This seems to be pretty good in terms of processor companies. You look at the PE ratio, and when you start trying to compare it to bigger companies like Nvidia, this looks extremely cheap. From there, good volume. This is looking like a very solid company. The stock has also gone ridiculous, and of course now it's starting to trade within a range, so I would assume that for a while anyways it's going to trade within a range. It may, when we start actually zooming into the actual stock, the charts itself, if we look at different charts like the more current ones, we actually see a flag starting to tick, and of course if it breaks above that flag, there's going to be higher and higher prices coming soon, so that's actually quite promising right now. We can also see that they are willing to raise their dividends, as we can see from July 30, or we'll go May 2019 to May of 2020, there was a 13-cent raise. And then from May 2020 to April of this year, it was $1.02, which was another 12-cent increase. This is great increases, especially considering that it's a tech stock. Now, tech stocks don't generally do really well when it comes to dividends, but of course, they are also killing it with their quarterly earnings, and they are making more earnings on less revenue, which is fantastic to see. TransCanada is another good one. This one pays a very high 5.5% dividend, and of course trades at an average volume of 4 million shares, and its volume as of the time of recording this video at the close of the 25th was 18 million shares. Over a 5-year chart, we can see that it dipped off in 2020, 2019, also a little bit there, but mostly in 2020 because of COVID. Now, of course, oil prices plummeted. If it can continue to rise up, if it can get back to its former self, then this is looking very, very promising when it comes to a dividend, also when it comes to the actual stock price. They've also just recently raised their dividend, which is one of the few companies in Canada that can. The banks can't right now. So because of that, they were able to raise their dividend, which is really nice to see, and that just shows to us investors that they're still a very, very healthy company to invest in. They've also beaten the last 2 quarters, technically last 3, but I'm not going to classify that as a beat. It's not big enough for me to classify it as a beat, but less revenue, heck of a lot more earnings. Very, very, very good company right now. So if you're looking for dividend growth as well as stock price growth, these are some companies to look at. Never trust a random YouTuber. There are a couple of companies that I do currently invest in on this list, TD being one of those, and technically JP Morgan through an ETF. So keep that in mind. I hope that this video has helped you. If it has, hit that like button and subscribe, and I'll see you guys again in my next video.